Okay, Syndicate members, Akil here of Trade Empowered, of course. I have a few things I want to take a look at tonight, and I actually may save a couple of them for later on in the week as they're still in the beginning or intermediate process. Let's start with, we're going to take a look at some ugly patterns. Let's take a look at Pound Aussie. Let's go down to the 60-minute chart. And what we have here is a potential cipher, and I'm going to measure it out for you and kind of walk you through why it's a potential, maybe not, depending on how you trade. And we're looking right here. We're looking at our X to A leg right here. Boom. Swing low to swing high, X to A, or swing high to swing low, I should say, X to A. I'm looking at an A to B right here. Now you're saying to yourself, Akil, what about, let's change this to a pointer. What about this long wicked candle right here? Now, doesn't that, wouldn't that bring our B leg all the way up here, which would still be valid because we don't close above the 618, but of course we wouldn't get a 786 or a D completion close above that level. And I'm actually going to ignore this candle right here. And the reason I'm going to ignore this candle is because if we look down at our data, bring my little box over. If we look at this candle, we can see this was the 9 o'clock candle on Friday, which means this was the candle that was created during our non-farms payroll release and unemployment claims. And well, if you've ever paid attention to that fundamental release, then you know that the market often goes really crazy. There's panic upwards, there's panic downwards. And as you can see, the market usually closes and continues right where it left off. So what I'm going to do because of that, because I know this is strictly an emotional candle, because I know the candle spiked up, it spiked down and closed right where price action was at prior to, I'm going to ignore this wick as like it didn't happen because of that emotional move. So I'm taking my X to A to B. I'm going to take my normal B to C, which comes down to my 127. You can do the measurements if you want. I'll do them for you. I know some of you guys are still pretty new. We come down to our 127. Let's bring in our 1414 to make sure we don't close below that. Boom, we do not close below our 1414, giving us a valid C leg. And I'm going to look for my D completion as always at this 786 at 81.28. And again, that 786 does not complete above this wick, but because I know what that candle was from, because I was actively involved in the market while that candle was being formed, I'm going to ignore it and just look at it as type of a reactionary move that really has no meaning in the overall scheme of things. So that's Pound Aussie, potential cipher pattern here, 81.28. We have something similar on Pound CAD. This one's going to be a little bit sloppier, but I want to show you two potential patterns here as well. And again, if we look at this big candle right here, this big impulsive leg, we go to my data, you can see once again, Friday, 9 o'clock, this was the non-farm payroll candle as well. So just like in the example previously, I'm going to ignore this candle. Now, here are the two patterns that I'm looking at. I'm looking at an impulse leg either right here. My first one's going to be X to A. My second one is going to be X to A down here. And let's make these different colors so it doesn't get too confusing. Purple. We'll thicken that up some. Back. So let's take the blue pattern first. Looking at X to A, Fibonacci retracement from swing high to swing low. You can see that price action comes into my 50%. We're just shy of that 618, even if we were to count that that other candle. I know that 50% puts me on bat pattern alert. I know that all I need for my C leg is a minimum of a 382 retracement. We obviously get this right here. If you don't believe me, you can go ahead and draw it on. And then for my bat pattern completion, I'm looking at a completion at my 886 from my initial Fibonacci. So from my X leg up here to my A leg down there. So a bat pattern completion looking at 75.23. Now, if I take this purple leg, and if I bring in some new fibs, if I take this is my X to A right here, you can see we retrace into a 382. We do not close above the 618. So now I'm on cipher pattern alert here. And just like the previous example, we're looking at an X to A, an A to B right here, a C extension that comes to at least our 127 and does not close below our 1414. And I'm looking for a D completion at a 786 of my entire move. Let's just bring it on with the first fib we have. Bang, 786 of the entire move. Where's my other? I had a smaller fib on here I want to delete. There we go. Don't want to confuse you guys too much. Oops. Get up there. There we go. So looking for a cipher pattern, potential cipher pattern completion here at 74.98. So one is basically at the 175 even handle for the cipher pattern. The bat pattern is a little higher at 75.21. This is one of those scenarios where you can either take one, you can take the first one that happens, the cipher. You can take the bat that happens secondly. That's going to give you a much better risk reward. However, it may not end up completing because we know the ciphers before it. Or you can split your entry and do, say, half a position at the 786, another half of the position at the 886. Now, I just want to bring on something that's pretty cool as well. If I bring on my DSR levels, if I set my major to 240, if I set my minor to 120, let's change the colors a little bit. Each of these pattern completion levels is also going to be at a major and minor structure level as well. So that's pretty cool. You can see our cipher pattern right here. Look left, structure leaves clues. Minor DSR. Our bat pattern a little higher, up at both a major and a minor DSR level. And of course, if you don't have the DSR levels, just scrunch up your charts and you can draw in lines at these structure levels. But two potential patterns right there. Again, a cipher here in a greenish and the bat here with the blue outline. What else do I want to get to next? Don't want to make this video too long. Let's look at dollar Swiss really quick. And I'm going to keep my, well, no, let's take the DSRs off. Let's look at dollar Swiss. This one's a simple structure-based trade. You'll just see that with the dollar Swissy here. We're just coming right down in the structure. Nothing more needs to be said about it. Let's go to a 240 chart. We're just coming right down to a structure level. This is not going to be a bat pattern for me. I know some of you may be looking at this move right here saying, hey, Akil, price action hit the 50% and then came up to a 382 here. If I'm looking at any retracement right here, I'm looking at this one right here, and then this being our C to D retracement. And you can see our B leg clearly does not hit the 50%. So I'm not looking at this as any type of advanced pattern, but I will keep an eye on this as a structure-based trade. As you can see, it's pretty obvious. Price action is coming right down to this previous structure lows. If I were to bring on, once again, a dynamic support and resistance level, DSR, I can probably put on a daily one. Let's put on 1 day, and we'll probably have there you see, major DSR right at this level. RSI is currently oversold. So if we do get some type of a retest, I mean, you could buy it up right here. Very short, very small. We're at an even handle as well, 89 flat. You could buy it up right here, a very small risk. Or if you're a little more conservative, you can wait for a retracement back up and then a retest of this level. See if we get some RSI divergence and have a nice CTS-based trade. Now, if I were going to buy this, here's what I'm looking for. Or if I am going to buy it at market, here's what I'm looking for. I'm going to take the ATR of my entry candle, which would be this red one right here. The ATR of that is going to be 20. So I'm going to take between 1 and 2 ATR below the low of this structure. So the low of my of this structure right now, I'm going to change back to my crosshairs. The low of this level right now is 88.94. 88.94 minus 20 is going to be 88.74. So a 1 ATR stop would put me right at 88.74. A 2 ATR stop would put me at 88.54. What I want to do then is I want to zoom out and see, does one of these levels give me a better opportunity than the other? So in this case, does the pink level put me safer than the blue level? Does the blue level put me safer than the pink level? If I zoom out my charts, can't really see much here, but let's go out to a daily chart. And you can see that neither one is going to put me at an advantage. So in this case, since the blue, which is the deeper stop loss, the one that's further away, since that doesn't really put me at any type of real advantage of the pink one, I would just, hey, keep your losses or keep your stop losses shorter and put them at the pink. So it's a low risk trading opportunity right here. Is it the best trading opportunity in the world? No, we don't have a lot of fibs. We don't have a lot of harmonic action here. We may get, let's see if we get a harmonic move right here. This is going to be a reach for one. Yeah, we can make the case for a sloppy harmonic move right here as a reach. Let's see if we get another one. That's a little high, but we're at a structure and it's a very low risk opportunity. So that's dollar Swiss. What else? What else? What else? Did pound Aussie. We did. Let's not worry about it. We'll do pound Swiss later in the week. Let's go New Zealand dollar. I actually put up a tweet for you guys that follow me on Twitter or follow me on Facebook. And if you don't, go over and like my Facebook page. Not many of you like it. Only about 400 something. But I put a tweet up there saying, hey, if anyone has something you want to look at, I'll write it in within the next hour and we'll take a look at it. And let me actually go over and check the Facebook page first before I go on to do this. All right, let's look at New Zealand dollar. That seems to be the popular one. Let's go New Zealand dollar, 4 hour. And the trader asked about the daily. He said, let me read this tweet. He said, going to write this a few tweets. New Zealand dollar broke structure recently on the daily, putting our bias bearish. But now we shot back up. Can we build a case on where to short this market, looking for continuation to the downside? I actually don't have I actually don't have a bearish bias here on New Zealand. If we look at the daily chart, you can see I've been doing some analysis on here, or some teaching on here. We're basically higher time frame. We're in a wedge here. You can see these two blue lines. Our lower trend line, our higher trend line. We're in a wedge, and then within that wedge, we're basically just in a period of consolidation. And this is the reason New Zealand dollar has been so good to us as far as patterns, because, well, when we get those periods of consolidation, we get a lot of advanced patterns inside there. So I don't necessarily have a bearish bias on New Zealand, especially on the daily, until we break this level right here. Until we really break 7,400, I'm basically in the middle. I don't have a bullish or bearish bias. Now, and you can see we're in a little flag pattern right here on the way down. We just hit the upper trend line. If we go down to a lower time frame, however, we do have an inverted head and shoulders pattern. So if anyone's looking to get long, here could be a reason. You can see we have our left shoulder right here. We have our head right down here. We have our right shoulder up here. And you can see we have a beautiful neckline here in fuchsia. Beautiful neckline here in fuchsia. Now, I'm not a head and shoulders pattern trader, but basically I look at them just like structure. You know, we see the market, we shoot down, shoot back up, give us an initial structure level. We shoot down, creating a new structure low. Market comes back up to retest that neckline, which was our initial structure level. We then shoot down again, retesting our left shoulder. We shoot up, we get a break above, close above that structure level. So you can see we have a new rotation in trend. Now, even though, you know, we still have these highs over here and right here to be concerned about, because in overall we're in consolidation. But recently we put in what? New structure high, or initial low, new structure high, or initial low to initial high, outside return, new structure high right here. What would we expect? Well, we'd expect an outside return back into this neckline. Looks like that's going to line up with a 382 Fibonacci retracement. A little short. You can see right underneath it, we're going to 382 Fibonacci retracement. And, well, what I would expect would be a bounce up to the high side. That's how I would trade this head and shoulders. Now, the issue with this one is you want to ask yourself, is there enough room for expansion? And, well, with structure lurking right over here and this channel going, this bearish channel as well, the overall flag pattern, with structure right there, you may want to be cautious with those targets. Let's see. A 1-to-1 measured move would put us after structure. Let's see what a 127 Fibonacci extension would give us. Swing low to swing high. A 127 Fibonacci extension would put us right at that structure level. So if you're going to take this pattern, if you're going to go down to a lower time frame, you can see we've put in a double bottom already. Didn't get our RSI divergence, but we put in a double bottom. And we're actually putting in a 2618 right here. If you're going to take this pattern, I would definitely have target ones at this 127 extension. I wouldn't look to get too greedy just because of structure looking left. But you can see there's still a heck of a lot of opportunity in there. We're looking at 82.71 to 83.71, so about 100 pips of potential profit. And if you're trading this like a 2618, we know stops. Let's see if I can delete some of this first so I don't confuse all you guys. If we're trading this like a 2618, we know stops need to go below this structure level right here. I get them a little safer, get them below this neckline as well. And you can easily get a very good risk reward ratio on this type of trade. So I know you're looking for a potential short entry, but can't really give you a reason to take one yet unless you're going to play that channel. But there is a potential long entry right here with an inverted head and shoulders on New Zealand dollar. So we're running 15 minutes. That's longer than what I expected. I did have a few other things on my radar, but again, I'll save them for later in the week, and hopefully they don't complete overnight. But take care, Syndicate members and live room members. I will see you tomorrow.